Hello and welcome to the Tokyo CPI preview with ATFX. My name's Nick Twidell, I'm the Chief Market Analyst, and we're going to look at some major inflation data that's due out of Japan and potential trading opportunities both with dollar yen and some of the yen crosses as well. Once again, every time I do these videos, I find that we cannot go anywhere in the last few months without mentioning geopolitical concerns. Obviously, first I'd like to start off by inviting you all to join our channel if you haven't already. We'll keep you updated with everything going on in the financial markets, from economic data releases to financial news, and of course everything that we're getting from the US and President Trump with regard to trade. Nicely segued into that, of course, because overnight we got a huge update, and the update was actually positive for a change, and that's greatly affected the currency that we're going to be looking at today. Essentially what we had was the US, and it felt like a fairly coordinated update. President Trump coming out saying that he will be doing a deal with China and it will be very good for them. Treasury Secretary Bessent, he's coming through saying that deals will be done. That was from a closed meeting, but we got the update anyway. It's great for Japan. Japan were one of the first countries off the blocks to start negotiating with the US. I think the US was saying there's another 36 different countries that are negotiating with them on trade after those reciprocal tariffs came through. So let's have a look at what we're looking at. So fundamentals have been largely ignored over the last few weeks, but they're still crucial. They're still going to affect what central banks do. And underlying everything, they're going to come back to really have interest rate differential effects on currencies. So that's what will take us for longer term trades. We still need to keep an eye on what is going on with these underlying fundamentals, and it is a big one coming out on Thursday here in the Asian session. The expectation is for the year-on-year inflation data, and it's the Tokyo CPI, and that is the most watched in the Japanese market, to come in at a whopping 3.2%. Now that is massively high. I think it was 2.4 for February. This is for obviously the March numbers. 3.2 and I think 3.3% on certain estimates. That's a huge number, and this is what's been driving the Bank of Japan to want to raise rates. They've pulled back slightly on their hawkish rhetoric recently because of global risks. That's the geopolitical stuff we're talking about. But let's have a look at the charts now and see if we can find out where there's going to be some trading opportunities. So here we are. This is dollar yen, and this is where we started to see the Bank of Japan get a little bit more hawkish. They were going to raise rates. Raising rates will see the currency appreciate because inflation has got sticky. And obviously this came off the back of a 20-year zero or negative rate environment. And we saw a really good move down from 160 all the way down to these lows, sub 140 here. And it's been very volatile. As you can see, last few days, what we've seen since the start of April, when we got that big tariff update from the US, geopolitics have led to dollar selling, yen buying. Yen is one of the biggest haven products in currencies, along with Swiss. The dollar normally is, but in this circumstances, the dollar's suffering, and gold was the other one that I've mentioned. So really strong appreciation. Here's the start of April. We're up at 151, over 151. We dipped out well under 140. Massive, massive moves, over 10 big figures. Now, the move we saw yesterday is this move here. This is on the daily charts. I said, look, a really big appreciation north of 143. These are percentage moves in a day. We don't normally get these in foreign exchange, but we have over the last few months. The big thing we're looking at now, this CPI data, if it does come in this high, we will have to see rate hikes from the Bank of Japan at some point in the near future. All things being equal, not many equal things at the moment, that should lead to yen buying. So what we're looking for on these longer dated charts is probably levels to sell dollar yen. Now, we are in the middle of massive ranges. The next level coming up is around about 148.70. 200-day moving average is around 150.25. It's going to be a bit of a momentum feed. But probably the key levels we've got is on the daily charts in particular, this low here, 141.46, if you're looking to sell a break of there. And then obviously the low we've got here, which coincides with now the longer term trend line, 139, did I see? Yeah, 139.86. A break here could take us much lower. I'm going to bring us into the hourly chart because that's probably what we're going to be looking for to be able to trade much quicker and much faster when this data comes out. Now, obviously, if this data comes in on expectation, we'll probably see a little bit of a move because I think that number is high. So I would think we're going to see some yen buying. Conversely, of course, last month was 2.4. If it does come in lower than expected, we could see this rally in dollar yen continue. At the moment, you'd be looking at these closer ranges. You'd probably be looking to buy a break of this high, 143.21. We're sitting on the 200-day moving average. It was largely ignored yesterday, but it has stopped there this morning. That could be a good level. And then we're going to be looking to buy around about 140. So plenty of trading opportunities. Opposite is the same. Comes in anywhere, 3.3, 3.5, crazy numbers up there. That is going to really put some pressure on the Bank of Japan. They're going to be wanting to buy yen. Bang, we should see it back down to 140. I know it sounds crazy. Normally we'd be talking about 70 or 80 point moves on some of this data, but it could push it this far because the market is that sensitive, I think, to data and to geopolitical updates. Don't get me wrong, this data is going to be important, but keep an eye on what's going on with that overall risk situation and weather situation, I should say, and whether we get an unwinding of the haven trades we've seen or whether they're back on and things don't look so great. I'm just going to flick over to another couple of charts just so we can have a look at some of the options on the crosses, which takes out that dollar aspect. This is euro yen, had a great trading propensity not too long ago, and it's not looking too bad, especially if you're looking to buy yen. That would come with the stronger number. Resistance coming in now around about 163. Seems a long way. As I said, it's only a big figure and a half. What's that between friends at the moment in this market? Using that to sell against with a stop loss above. Obviously, conversely, if we do see that lower number, maybe a break to the top side. Support now coming in just around 156.50. I'll skip over. Let's have a little look at, I think we've got sterling yen next. Probably more in the middle of the range here. It gives us scope. It gives us big scope, right? 3 big figures to the downside, maybe 4 to the top side. That 200-day moving average coming in around 192, as we said before. Lower data, expect to see sterling yen move higher. Stronger data, expect it to go and look to challenge those lows again. I think dollar yen is going to be the big mover. We're going to see it move over the next few sessions. But if that CPI data does come in well off expectations, expect to see some good moves. And it's a good trading opportunity, probably more to the longer term. But if you can get on those moves short term, instead of like 60 or 70 points on any big differential, you're probably looking at 150, 200 points in these markets. So well worth trying to jump in there. But as always, when these markets are moving fast, smaller positions, bigger parameters. Thanks very much for listening to us. If you need anything from us at ATFX, please do let us know. Thank you very much.